Now we are moving on to the last final area, that is foreign trade policy. And FTP really, maybe before, that is in old syllabus, FTP was relevant because 25 marks they used to ask 20 marks on customs and 5 marks on FTP, but now when they reduce the weightage to 20 marks, so the literal relevance of FTP is not there, but at the same time we cannot skip it also. For that reason, what is really required, that much only I am telling you that you follow. Okay, first you see this, what is about foreign trade policy. So take page number 277, please listen. First, foreign trade policy, we have regulation of import and encouragement of export, which is not at all profitable for customs department, because customs department, if it regulates import, customs duty will not be there, so it's a loss to customs department. Same way, when we encourage exports, it is of no use to the revenue. So that's the reason why customs department said we don't have to take the responsibility of regulating import and encouraging the export. That's where they have removed this control of foreign trade and given to this Ministry of Commerce. Accordingly, Ministry of Commerce has made an act, that is Foreign Trade Regulation and Development Act 1992. Under that, they will be coming out with a policy or set of guidelines for the purpose of regulating imports and encouraging exports, that is this foreign trade policy. So foreign trade policy set of guidelines or instructions issued by CG. Which CG? Ministry of Finance or Ministry of Commerce and Industry? Commerce and Industry, in matter related to import of goods into India or export from India. Basically, what is the difference between FTP and customs? FTP is like brain of international trade and customs is like body of international trade. What to import, what to export is given in FTP. So it will regulate, develop and promote international trade. How to import and how to export is given in Customs Act. It contains procedures, valuation and consequences. And the provisions of FTP are governed by one act. What is that act? Foreign Trade Regulation and Development Act. And who will be making this foreign trade policy? DGFT, Directorate General of Foreign Trade, and below them there will be regional authorities just like our MCA and ROCs, like that. Okay. Next, FTP is 2023 foreign trade policy, and previously they used to keep a sunset clause, like this time like 5 years or 4 years only it will be there. Now they have not given, means till the time a new foreign trade policy comes, the same thing will continue in operations unless otherwise specified or amended. And the contents of foreign trade policy, we have basic policy plus export incentives, handbook of procedures, ayat niryat forms, that is import export, then SION, harmonized system of nomenclature coding, that is which product, what is a restriction, etc. and all. But all these things are not there in syllabus. What we have is only basic policy plus export incentives. Then, so look into the basic aspects of FTP. Under foreign trade policy, imports are classified into 4. Prohibited. Prohibited means which cannot be imported. Restricted, can be imported, but we need a license called as authorization. And reserved for ST, State Trading Enterprises, means only they can import. Example, Food Corporation of India can only import food related goods. IOC can only import oil, petroleum products, etc. Then freely importable means anyone can import. Freely importable does not mean no need to pay customs duty. Any person can import, but no need of license. But depending upon the product, we need to pay the customs duty or it is exempted. Same way, exports are also classified into prohibited, restricted and freely exportable. Authorization means it is a license which is given by the DGFT, and only restricted goods requires authorization, and with the authorization only the goods can be imported or exported. And this authorization is not like a right. Suppose if the authorization is given so to a person, and that will have a validity. After that validity, if you go and ask them to extend, it is up to their discretion whether to extend or not to extend. You cannot say that already you gave me the authorization, so you have to extend. So authorization is not a right, and DGFT or regional authority may refuse to grant or renew. And next, restricted goods import are subject to actual user condition. What is the meaning of actual user condition? Only the importer who is importing can use it, and he cannot give it to any other person. Only importer can use the same, and DGFT can dispense this condition. Import export code is to be obtained by every importer and exporter, and that is nothing but our 10-digit permanent account number. And specific provision in FTP or handbook procedure shall prevail over the general provisions. These are some basic aspects. And trade facilitation. So what they will do, they will give questions like this. So comment on the following statements, or what is the validity of the following statements, like true or false statements they will give, and they will be telling that, so if there are some specific provisions in contradiction with the general provisions under foreign trade policy, then DGFT can permit the importer to choose any of these provisions. Appear to be correct, because I drafted like that, okay, appear to be correct, but it is not, because clearly specific provision shall prevail over general provisions, okay. And then they will say IEC is a 11-digit code which needs to be obtained by every importer and exporter and should be quoted in all the forms imported or exported. 10-digit number, you understood. So they will be making questions like that. Then trade facilitation under foreign trade policy, and this trade facilitation is like they have appointed one committee, National Committee on Trade Facilitation. So what they will do, it's a interministerial body, and they will provide lot of trade facilitation measures in order to encourage people to do exports, okay. Trade facilitation has been constituted. TFA emanates from 4 pillars. So what is that? Transparency, they will be transparent. So technology, simplification of procedures, and risk-based assessment and infrastructure. So they will create proper infrastructure in the India for the purpose of encouraging people to come to India and start their business, and they will be transparent with respect to all the provisions which are there. No bribe, no corruption, nothing of that sort. Then technology, everything will be online only, and simplification of procedures, that is ease of doing business. So these are the 4 pillars of this National Committee on Trade Facilitation, and it is like single window clearance, SWIFT facility, wherein so you don't have to go to different people to get the permission. With one person itself you will get. That's why it is a interministerial body. All these things you listen. If at all you don't know any of these 4 questions, you have to write 6th question. At the time when you are writing the 6th question, it will be useful, okay. Just to close your eyes, whatever you could recollect, you write it, okay. Later on we will see. Then free passage of export consignment. What are the various trade facilitation measures? Free passage of export consignment, what does it mean? It means that consignment meant for export shall not be withheld or delayed. That is a lorry which is going, that contains the export goods. Officer will come and stop. So that person will say, sir, this is for export, okay pa, you go. Like that they will leave. Consignment meant for export shall not be withheld or delayed for any reason by any agency of central or state government. In case of any doubt, authorities may ask for an undertaking from the exporter and release such consignment. They will not delay the export consignment. Then no seizure of export related stock. Suppose if there is any stock on which it is unaccounted also, it's okay. E-waybill not proper, it's okay, fine. No seizure as so as to disrupt the manufacturing activity. In exceptional cases, based on prima facie irregularities, seizure can be done. That too for a maximum period of 7 days unless irregularities are substantiated. So this is like giving support for export goods. Then authorized economic operator, AEO. So who are these AEOs? That is depending upon their exports. Depending upon their exports, they will be given this AEO status. And what is that exports, etc. Already this itself is too much. Please don't add anything on the top of this. So there will be some limits. Based on that limit they will get. What are those limits, etc. and all? Don't break your head, okay. Some limit is there. We don't have that limit and all. And it is developed by Indian customs to enable business involved in international trade to reap the following benefits. What are those benefits? They will get a preferential bids, okay. So preferential, what is preferential? Preferential customs treatment in terms of reduced examination and faster processing and clearance of cargo. As soon as the goods are imported, they will not check, they will not open the box, examination, nothing will be there. As and when it comes, it will be released. Like khadi craft, government box, so we will not open like that and all, you understood. Then B for border clearance privileges in mutual recognition agreement partner countries. Border clearance privileges means we are giving preferential treatment here. Same way, with which India is having trade agreement, there also we get the preferential treatment, that is this border clearance privileges, enhanced port delivery, that is priority. So it is like priority check-in is there now, your bag only will come first, like that, okay. Enhanced port delivery, then deferred payment of customs duty, and yes, for self-certification, usually we need to produce a country of origin certificate. That country of origin certificate, the exporter in India should obtain it from the Indian government. But if they are coming under AEO status, they themselves can certify that it is a Make in India product. What is the advantage for Make in India product? What Modi ji has achieved in last many years is that he went abroad and he made many trade agreements wherein many countries are allowing our goods to be imported at a preferential rate. So therefore, if we produce country of origin Make in India certificate, so they can import at a lesser rate, so they prefer goods to be imported from India, okay. But now Trump has come and changed everything, that is this. So self certification, that is preferential bids. So preferential customs treatment in terms of reduced examination and faster clearance of cargo. B, that is border clearance privileges, enhanced port delivery, deferred payment of duty, self certification. Then other measures. What are those other measures? Single window system to facilitate export of perishable agricultural produce, because agricultural produce and a lot of approvals we used to take, because of which by the time we get the approval the tomato will be rotten, okay. For that reason, now there is a single window clearance. Niryat Bandhu, Niryat means export, Bandhu means friend, so export friend, exporter friend, like that. Hand holding scheme for mentoring new entrepreneurs. Then issue of EIEC, immediately once you apply you will get DGFT online customer portal. So 24/7 there will be a customer portal, you can talk to them whenever you feel like depressed. So online facility for e-registration come membership certificate, RCMC, registration come membership certificate. It is like, so whenever we are exporting, there will be some related export promotion councils. So with that export promotion councils, we need to take the membership, that is this ERCMC, online certificate for e-certificate of origin. Everything they are giving electronic, in one line they can tell no, but they are giving all these things separately as if they have created something great. Online facility to file quality control, see 4 online, so 5 online. EIEC, online customer portal, online facility for e-certificate, online to file quality. So they have brought in everything online, got it. Then electronic record, 6th one, electronic record for export proceeds through BRC, that is bank realization certificate. Whenever we are exporting services, we need to prove that the foreign exchange proceeds are realized, then only we will get the refund. For the purpose of proving that the foreign exchange proceeds are realized, we need to produce a BRC, bank realization certificate, or foreign inward remittance certificate, FIRC, with the GST department. So that particular certificate is now made online, that is this. Then they are creating some towns of export excellence. Towns of export excellence means, like for example, state government may not consider that particular town as a town at all. So but central government will consider that and they will give a lot of support. Example, Tirupur, like that one town is there, and this particular town lot of exporters are there. Whether state government is doing anything for them or not, central government will pump in money and create good roads, good infrastructure, all those things. Why? Because they are contributing for the export. That is known as town of export excellence concept. Selected towns producing goods of 750 crore or more may be notified as TE, and in case of handloom, handicrafts, agriculture and fisheries, the limit will be 150 crores. And common service providers in these areas shall be entitled for authorization under EPCG, and units will be provided financial assistance on priority basis. Then there is something called as status holder certification. Status holder certification is depending upon your export performance. What is that export performance? If you achieve $3 million, then you will get 1-star status. Then $15 million, 3, 15, 50, 200, 800. $3 million, 1 star. 15, you remember this number, 315, then 50, 200, 800. Okay, mobile number and all you remember. Now this also you try to remember. 315, 50, 200, 800. 3 is what? 1 star. 15, 2 star. 50, 3 star. 200, 4 star. 800, 5 star. So this much of $1 million we need to achieve. Then we will be getting the star status. Okay, and here what is the purpose of this? To give the recognition, to encourage exporters by recognizing their achievement and help them build marketing infrastructure. and all exporter of goods and services, even service also will be eligible, and technology having IEC shall be eligible for recognition. Now, what are the benefits to the status holders? These are the benefits. Already they have tested it for November. I don't think so it will be coming again. Wipes made in India exempted. Wipes not wipes. Wipes made in India exempted. Wipes W warehouse license. So we saw that private warehouse. Who can establish a private warehouse? Any person who is having 2-star and above status can establish a private warehouse. Then input output norms on priority. So that is within 60 days by norms committee they will give. What is the need of input output norms? While discussing export promotion schemes, I will tell you that is whenever we are importing some goods under advance authorization etc., there should be SION notified. Means for 1 unit of output how much unit of input is required, otherwise we will not get the benefits under export promotion schemes. So if you need the benefit, you need to get the input output norms notified, that is within 60 days they will do for these people, all status holders. Preferential treatment and priority in handling, same way. That preferential treatment, preferential bid there we saw na, the same preferential treatment. Export free of cost means no need to pay any customs duty except for gems and jewelry sector. Self declaration, this point is also there for AEO. Then made in India self certification for 3-star and above, not for 1-star and 2-star. Exempted from furnishing bank guarantee and compulsory negotiation of documents. So these are the benefits that are applicable to status holders. How to compute export performance? Listen, export performance is not 1 year. Export performance is based on current and previous 3 years. FOB value of export proceeds realized during the current and previous 3 years we need to take. So current year plus last 3 years, you aggregate it. That will be taken as the export performance. Say for example, current year and previous 3 years cumulatively $10 million. Okay, so which means that $10 million we have to achieve in all the 3 preceding years. Then in the 4th year we will get 1-star status. Okay, so first year, 2nd year, 3rd year, every year the export performance should have been $3 million. Then only we will get. For example, it is like this. Say 2020, 21, 22, 23, 24, 25, 26, 27, like that we have some data, and every year we made a exports. Okay, so exports in a particular year, this is financial year, exports in a particular year. So exports in a year, say for example $1.5 million, thereafter $2 million, thereafter $3 million, then $8 million, then $10 million, then $14 million, then $20 million, $25 million. Now this is exports in a year, but we need to get the export performance. This is export per annum, but we need export performance. How to find export performance? Export performance, in this case just $1.5 million. Here it will be $3.5 million. Here it will be current year and previous 3 years. 3 plus 2, 5 plus 1.5, $6.5 million. Here it will be 8 plus 3 plus 2, so 13, $14.5 million. And here current year plus 3 years, 18, 20, 23 million dollars, 23 only, now don't count. Current year and previous 3 years, current and previous 3 years, and 2025 current and previous 3 years, that is 14 plus 10 plus 8 plus 3, that will be $35 million. And again here current plus 3 years, 20 plus 14 plus 10 plus 8, that will be $52 million. Last 25 plus 20 plus 14 plus 10, that will be $69 million. And what is the 1-star status? 1-star status require 3 million. So that too you should achieve for 3 years. So 2021, 2022, 2023. So continuously 3 years we got $3 million. So in 2024 they will give 1 star. They will give 1 star. Again for $15 million, that is a 2-star. So $15 million if you see, so you are achieving 23, 35, 52, and after 3 years, in the 4th year you will get 2-star status. So like this they will give the star status. So 2 points you need to remember. While computing the export performance, we will take current year and previous 3 years exports together. Whereas we need to achieve this export performance consecutively for 3 years. Then in the 4th year, that is, we will be getting the star status. So that is with respect to this. Status recognition depends upon export performance, and applicant shall be categorized as status holder upon achieving export performance, which is counted on the basis of FOB value of export proceeds realized during current and previous 3 financial years. And here usually export earnings should be converted in foreign exchange. However, export proceeds realized in rupee in case of exports to Iran and receipts in special rupee Vostro account permitted by RBI also considered as export performance. Sometimes the consideration will not be received in foreign exchange, it will be created in rupee Vostro account, and then also it is permitted by RBI, it is treated as received in convertible foreign exchange. And this 3 years we need to have the export performance. For gem and jewelry sector it will be only 2 years. And grant of double weightage. Grant of double weightage means if you are making $1, it will be counted as $2. For whom? MSMEs, manufacturing units having ISO BIS certification, units in northeastern states, Sikkim, Jammu and Kashmir and Ladakh. Then export of fruits and vegetables, 4 people. MSMEs, manufacturing units having ISO BIS, northeastern states, Sikkim, Union Territory of Jammu and Kashmir, Ladakh, and export of fruits and vegetables. So these are some points which may be tested as a true or false question or explain the validity of the following statements like that. Now we are looking into specific provisions related to import and export. So here you need to remember one easy point, that is, if the product is restricted, it requires license. General rule you need to remember. What is the general rule? If a product is restricted, that requires license, that is authorization. If a product is freely importable or freely exportable, that does not require authorization. This is the general rule. Okay. Now we need to remember the exceptions for this. So only those exceptions we need to remember, so that in the other cases we need to apply the general rule. So what is the general rule? If you want, you can write down somewhere or you can remember. General rule means what? General rule means if a product is restricted, that requires authorization. If a product is freely importable or exportable, that do not require authorization. Now look into this. We are importing samples. When we are importing samples, those samples, we don't have to see whether it is restricted goods or we don't have to see whether it is freely importable goods. So it's an exception, you remember this. Suppose if you are importing some samples and those samples are defense, security items or seeds, bees or new drugs, definitely it requires authorization. Okay. All other goods freely importable, even otherwise restricted. Okay. So therefore here we will not apply the general rule, we have a specific provision. What does the specific provision says? These goods, even if sample imported, it is sufficient to create a replica of it. So defense and security items, even a small element of gunpowder is sufficient. So therefore samples etc. of defense and security items, seeds, bees, new drugs, that requires authorization. Other goods freely importable, even though they are restricted. In commercial quantity when it is imported, it may be restricted, but when you are importing in samples, freely importable. So this you need to remember. Then export you don't have to remember. Why export you don't have to remember? Anyhow restricted goods means requires authorization. Freely exportable goods means allowed, does not require any authorization. So you please cross it, remove it, delete it. Only this you need to remember. Okay. So general rule is what? General rule is that if it is restricted, then it requires authorization. And suppose if it is freely importable or exportable, freely importable or exportable, freely importable or exportable. So then what is your answer? No authorization. So does not require authorization. Does not require authorization. Got it? If it is freely importable or exportable. So therefore exceptions alone we will remember, and these and all not required. Okay. Next, duty free import of samples. We can import the samples without payment of customs duty up to 3 lakhs, provided you are an exporter. You are an exporter, you can import the samples without payment of customs duty. To what extent? To the extent of 3 lakhs. Then import and export of gifts, here everything you need to remember, okay, and there is no general rule, fully specific only. So you are getting the gift. When you are getting the gift, you don't know what is the product inside the gift. If you know, then it is called as gift. So therefore you are getting a gift and they are sending you the gift, someone over there, and when they are sending you the gift, you don't know what is the product, so how will you get the license? So therefore, what if that gift contains an article which is restricted? So therefore we cannot check that. That's the reason why they created a simple provision in case of import of gifts. And if it is import through post or courier, including e-commerce, only Rakhi and life-saving medicines is allowed, and that too it does not require authorization. Other goods are prohibited, you cannot bring at all, got it? Other goods, authorization not required. Even though when you import it normally requires authorization, in the form of gift when it is coming, authorization not required, but ensure that you are not importing it through post or courier, okay. And this Rakhi life-saving medicines alone is allowed through post or courier and does not require authorization, and customs duty will be payable. However, if the customs duty on Rakhi is up to 100 rupees, then it is exempted, okay. One point unnecessarily they have given, we can leave that also. So where from customs duty on Rakhi is up to 100, from foreign country to India it is coming, okay, and definitely, so this point is relevant, but it's okay. All other modes, authorization not required. In case of export of gifts, in case of export of gifts, when you are sending, you know whether it is a restricted product or freely exportable product. If it is restricted goods, authorization required. If it is freely exportable goods, authorization not required, correct. But here they have brought in one point, that is you are exporting value of the goods more than 5 lakhs in a financial year. What kind of a playboy you are that you are sending gift more than 5 lakhs in a financial year? We want to see you, who you are. So authorization is required. Value greater than 5 lakhs in a year. Got it? Next. Next you see passenger baggage. Passenger baggage actually, so import of baggage, export of baggage. Export of baggage you see restricted goods, freely exportable goods. Restricted goods, freely exportable goods. So no need to remember, okay. Then next, import of baggage, freely importable goods, authorization not required. So therefore we don't have to bother about this. What you need to remember is only restricted goods, that too generally restricted goods, authorization does not require, okay. But in that they have created a classification. What is that? If it is household goods, restricted goods, generally authorization required. But in that also they created an exception. Household goods and personal effects, drawings, patterns and other notified goods does not require authorization. This alone you remember, those things and all we can remove. Then import of second hand goods. Whenever you are importing second hand goods, so fully this chart you need to remember. Whenever you are importing second hand goods, the second hand goods is divided into two, capital goods and other than capital goods. Other than capital goods, you see that other than capital goods, if it is imported for the purpose of repair, refurbishing, recondition, authorization not required. In remaining cases that requires authorization. This is other than capital goods. Other than capital goods means what? Inputs. Inputs when you are importing in second hand form, it is for the purpose of repair, refurbishing, reconditioning, authorization not required, otherwise authorization required. Very simple case. Suppose if it is capital goods, they have given some list of capital goods. Definitely that is going to spoil our environment when you are importing in second hand form. So that's the reason why that always require authorization. What are they? Air conditioner, second hand AC which will emit CFCs, and generator sets, desktop, refurbished or reconditioned spares of computers or laptops, notified electronic goods and used IT assets from SEZ to DTA. So this list somehow you need to by heart and remember, because there is a high chance of asking this in exam. What are the list of goods which definitely requires authorization when you import in second hand? Air conditioners, diesel generator sets, then desktops, refurbished or reconditioned spares of computers or laptops, notified electronic goods and used IT assets from where to where? SEZ to DTA. Okay, this case always requires authorization, but other capital goods authorization not required. In that, if you are bringing some second hand spares and all, ensure that it has at least 90%, 80% of the residual life of original spares. For example, if the original spares is 10 years, the second hand spare should have at least of 8 years, because in the name of second hand spares, the waste and scrap should not enter into India. That's why they have brought in this point. Then goods including capital goods used abroad for at least 1 year can be imported without any authorization, even though they are otherwise restricted. This is for the purpose of setting up a project in India. Then prototypes. Prototypes means what? Samples. This is also like samples, but only difference is that samples will be like normal trade samples, but prototype is like a working model of a particular product, and this prototype can be imported, but it is subject to actual user condition. For example, lot of products in India are being manufactured as a prototype only. First a prototype will be imported and we will create a replica of that. For example, so this Louis Vuitton, like that one bag is there, handbag. So this Louis Vuitton bag, so if you are importing and all, customs duty payable will be huge. Then what they are doing, so first one replica they will be sending. Using the same we will be creating here, because for all the branded goods, it is only for the brand value we pay, not for the goods. That goods will be $100, $200 only, but we pay $1,000, $2,000 not for the goods but for the brand value. So due to that reason, first a prototype will be imported, we create a replica of that model. So due to that reason, on that prototype we are not required to pay customs duty or not is not given here. It is about the authorization. Okay, so new or second hand prototypes or second hand samples may be imported without an authorization. The importer is an actual user, he is engaged in production or having an industrial license, and the importer files a self declaration that he is importing prototype for making a replica of the product. Then metallic waste and scrap, always restricted. Waste and scrap is always restricted, that requires authorization. Moreover, it is prohibited also. Certain metallic waste and scrap which contains hazardous, toxic waste, radioactive, contaminated waste. Then import for export. So import for export, see this, first you are importing which is freely importable, those product is freely importable on import, and export it is freely exportable. What is your answer? Authorization? No need to remember that. Authorization not required if import or export in the substantially same form. Then next, import is free, export requires authorization. What is your answer? Generally on import authorization not required, but export requires authorization. They are telling both cases. Authorization not required for import if exported in same or substantial same form. Then this alone you need to remember. Then restricted for import. If it is restricted for import, what is your answer? Definitely authorization required for import, and when it is restricted for export, authorization required for export. So this entire thing you omit it. Okay, just this alone you need to remember. Next, see this, import, export, re-import. First you are importing the goods. Imported goods are indigenous goods, and you are exporting for repairs, testing, quality improvement, upgradation. Again re-import. Should we again check authorization required or not? Yes. Every time you are re-importing or originally importing, you need to check. Even re-imported goods also, restricted goods means authorization required, freely importable means authorization not required. So we can remove this. You understood? And only few things you need to remember. Then sir, what about these export promotion schemes? Everything you remove, not required. Not required. All these things you delete. All these things you delete, and we will just look into this summary of various export promotion schemes. I gave a 4-page information, just that 4-page information is sufficient. Okay, and so you don't have to read beyond this. If at all a question comes, that will be for 4 marks. For 4 marks and all, this is too much worth. Okay, instead we can read something else. So see this summary of various export promotion schemes, and those who are watching YouTube etc., already it is there in our Telegram channels. You can download it from there. Already I shared it long back itself. So look into this. First we have various export promotion schemes. AA, advance authorization, then DFIA, duty free import authorization, EPCG refers to export promotion capital goods scheme, EOU, EHTP, STP, BTP, these are some notified areas. EOU refers to export orient unit, EHTP, Electronic Hardware Technology Park, STP, Software Technology Park, BTP, Biotechnology Park, and then deemed exports. Deemed exports means we are selling to certain people in India, but it is considered as export for the purpose of foreign trade policy. Now what we are going to do is that we are going to learn it column wise, and thereafter when we read the next column, so that this column information also will be again cumulatively covered. First, advance authorization you take. What is the purpose of advance authorization? To import the inputs without payment of any customs duty. In turn, what you should do with that? You should be exporting the goods. Means raw material you can import without payment of customs duty. But what you need to do with that raw material? Again, use it for making the finished goods for export. With to whom it is applicable? Manufacturer, exporter. I am only manufacturing, I am only exporting. Merchant exporter tied to supporting manufacturer. For example, you are merchant exporter, I am manufacturer, and we both are making a joint venture. Okay. Not applicable in case of pharmaceutical products. For pharmaceutical products, only manufacturer should be exporting, and exporter holding a AUO certificate, authorized export, like economic operator 1 program we discussed na, they will also be eligible for this advance authorization. Exporter with 2-star and above status is also eligible for advance authorization. Got it? So these people are eligible for advance authorization. Manufacturer exporter, merchant exporter tied to supporting manufacturer other than pharmaceutical, then AEO and 2-star and above. What can be imported? Inputs I can import without payment of duty. Even spares. Spares are not inputs, spares are actually capital goods, but that also I can import under this scheme, but up to how much? 10% of CIF value of authorization. Suppose if the authorization given is for somewhere like 40 lakhs, 40 lakhs into 10% to the extent of 4 lakhs I can import, means remaining 36 lakhs I can import the raw material, that is this. Then what is the benefit of import? I don't have to pay any customs duty. All customs duties, including additional customs duties like anti-dumping duty, safeguard duty, everything will be exempted here. IGST also exempted. 100% exemption from all customs duties. What is the validity of advance authorization? 12 months from the date of issue of authorization, and it can be extended for a further period not exceeding 12 months, but extension only once. Whereas in case of deemed exports, so it will be 12 months or project completion, whichever is later. Remember one more place where we come across whichever is later is this advance authorization. In case of deemed exports, 12 months or project completion, whichever is later. And what is the alternative to import? So if they don't want to import, can they make domestic procurement? Yes. In GST, that's what we call as deemed exports. So whenever you are the advance authorization holder, you can import it without payment of customs duty, or you can locally procure from me. When you locally procure from me, for me it will be treated as deemed export. Okay, deemed export under GST. So when I am making a deemed export under GST, what are the two options available to me? I may not charge GST from you. Got it? You are an importer coming under advance authorization. So you can import goods without payment of duty, or you can locally procure from me without payment of GST. So what are the options available to me? I am a supplier in India, I am making supply to you. So I have option number 1, I will not recover GST from you, so that you have purchased without payment of GST, or I will recover GST from you, you have paid GST, and that GST paid you can get as a refund. This in case of deemed exports. Okay, so that is this domestic procurement without payment of GST. And export obligation. So what is the export obligation? 15% value addition, that is the FOB value of export is greater than or equals to CIF value of import into 115. For example, if the import value is 1 lakh, what should be the export value? It should be greater than or equals to 1,15,000. Okay, and can make export. So how to fulfill export obligation? We can either make physical export, including supply to SCZ is also counted here. Deemed exports also counted. Supply as stores to a foreign going vessel or aircraft is also counted, because that is also treated as export na. So all these are counted for export. Even like sale to SCZ. SCZ is not really export, but for the purpose of this advance authorization, sale to SCZ is treated as export. Deemed export is also not export, but for the purpose of this authorization it is treated as export. Then notional value of material supplied free of cost by buyer included in CIF and FOB. For example, there is some material which is supplied by the importer to the exporter, that is importer outside India is supplying some material to me, I am the exporter. Now using that material I make the finished goods and I am exporting. Now this material which is sent by him free of cost should also be added into my CIF value of import and FOB value of export in order to count the value addition. For example, you say this CIF value of import, CIF value of import, normal CIF value of import is somewhere like $1,000. Okay, then next FOB value of export, FOB value of export. So this is normal FOB value of export is somewhere like $1,200. Now what happened? Imports free of cost, imports free of cost from foreign buyer, imports free of cost from foreign buyer, that is say some $150. This is notional value, this 150 is notional value. Now they may ask a question whether value addition achieved, under advance authorization, like that they may ask a question. So now what we need to see, what is the value addition that needs to be achieved in case of advance authorization? 15%, correct? Now what should be taken as the FOB value of export? What should be taken as FOB value of export? What they are telling, this notional value we need to add. What is the regular one? 1,200 plus this 150 also we need to add, so that will be coming to 1,350. So good only na sir when we add notional value, good only, but see what happens here. CIF value of import, CIF value of import, what is the CIF value of import? That will be already 1,000 we are importing, plus this 150 also will be added, so it will come to 1,150, already 1,000 here plus this 150 means this 150 should be added in both the places. Now you see the value addition. What is the value addition? Value addition is 1,350 minus 1,150 divided by 1,150 into 100. Value addition in percentage here, increase in percentage, 1,350 minus 1,150 divided by 1,150 into 100, that will be 17.39 percentage. Okay, but actually if you see 20% is the value addition, correct? So 1,000 to 1,200, the real value addition if you see is 20%. But what happened? This notional cost when it is added to both, so the value addition is going to come down to 17.39%. So this is what they are trying to convey there. That is notional value of material supplied free of cost by buyer included in both CIF as well as in FOB. Then whether the consideration should be received in convertible foreign exchange? Yes. Can the license be transferred? No, the license cannot be transferred. Whether imports are subject to actual user condition? Yes. Import is subject to actual user condition. Only the person who is importing can use it. And what is the meaning of license cannot be transferred? Means the one who is importing and obtaining the license, he only can import, and those imported goods you only should use. Then other condition, SION should be notified. What if it is not notified? If they are like covered under status holder, they will get the SION on priority. That is that point. For additional inputs beyond SION, authorization on the basis of self declaration and self ratification, and they need to, that is what does it mean? Suppose SION is 3, which means for every unit of output we need 3 units of inputs, and suppose if we are importing more than that, some extra quantity is required. So then in that case, on the basis of self declaration and ratification, we can import. Certificate from a chartered engineer that these imported goods are really used in export. And pre-import condition. Pre-import condition means not that, so first we will export and then that quantity what we have used in export we will get it as import without payment of duty, not like that. First you import without payment of duty and then use it in manufacture, and then you should have made as export. That is this pre-import condition. Input shall be procured prior to manufacture of export item And export obligation, what is the time limit within which I need to achieve export obligation? 90 days from the date of import. That is the biggest challenge in advance authorization, because I need to complete my production and I need to export within 90 days. Means it is like fast track batch only, regular batch not allowed here, okay. So then not applicable to, so certain imports are not applicable. Specified exports, they have listed out some cases where it is not applicable. And import of specified inputs, certain inputs not allowed under this scheme, certain goods are not allowed as export, and based on risk management DGFT may reject the application when we make, and prohibited items and items reserved for STA also not applicable. So these are some ineligible cases for advance authorization: notified inputs, notified exports, based on risk management, prohibited items and items reserved for STA. So that is about this AA. Then we have DFIA. DFIA for what? Same purpose, to import without payment of customs duty. And who can import it? Either manufacturer exporter, merchant exporter, whether tied to supporting manufacturer or not. So that is the advantage. First point same. Second point, so tied to supporting manufacturer, here whether tied or not to supporting manufacturer, these 2 points are not there here. And what can be imported? Only inputs. Here spares is there, but that is not there, only inputs. Here 100% exemption from all customs duties, but here only basic customs duty. Additional duties and all we need to pay. Then, so validity AA 12 months, okay, plus 12 months, but here only 12 months. Alternative to import, yes, they can also make domestic procurement without payment of GST. Export obligation, what is the export obligation? Here 15% na, but here it will be 20%. Then next, consideration in convertible foreign exchange, yes. Can the license be transferred? Yes. Here the license cannot be transferred, but here license can be transferred. Imports are subject to actual user condition, no, means the one who is importing can sell that goods to other person also. These are the two changes that we have because these two benefits, okay, because of these two benefits what they are giving, they are telling that only basic customs duty is exempted, others are not exempted. Then other conditions, only for product for which SION is notified it is possible, issued on post-export basis. Here pre-import, here post-export. What does it mean? Pre-import means first I need to import and use it in production and then it should be exported. Whereas post-export means locally procure, first export, prove that I have exported, how much of the quantity locally procured and present in export, that much quantity I can import subsequently. So that will not be useful for this export, that will be useful for subsequent export. So application made before starting of export. Then merchant exporter should mention the name of supporting manufacturer in the documents, and regional authority shall issue transferable DFIA. And export obligation, here only 90 days na, whereas here 12 months from the date of application, because import don't have any connection to export. First we will make export, thereafter we will get the license, got it? So due to that reason, once we make application, from the date of application within 12 months we need to complete the export obligation. And what are the cases where it is not applicable to? Tires. For tires industry, import of tires it is not possible. Input which is subject to pre-import condition. There will be some raw material which will tell that no, this raw material will cover under pre-import condition, that cannot be brought under DFIA. Next, EPCG you see. Suppose if you have not studied all these things, you will get laugh only while I am taking class. Okay, Arey, what is this? He is just going like express like that only you will feel. And this time also if you are not listening na, okay, and I want to see you for November 25, seriously, okay. So therefore be serious and listen, okay. So at least this way something will go in your head. EPCG, to import capital goods without payment of duty for export of goods, and that is AA is for import of raw material without payment of customs duty, DFIA also same, but EPCG is for capital goods, not for raw material, without payment of duty. Again, for what purpose? For export of finished goods. Who will be getting? Manufacturer exporter, same. Merchant exporter tied to supporting manufacturer like AA. Like AA, merchant exporter tied to supporting manufacturer, even service providers can bring under EPCG. Then what can be imported? Here capital goods, here these two are inputs, here capital goods including computer systems, molds and dies, jigs and fixtures, everything. And what is the benefit of import? Here also like AA, literally like AA, 100% exemption from all customs duties. Validity 24 months. Here 12 months plus 12 months, here 12 months, but EPCG will be 24 months from the date of authorization. Alternative to import, yes, they can also procure capital goods without payment of GST. Then first look into this export obligation. What is the export obligation? They need to achieve average export obligation, that is each year export should be average of the preceding 3 licensing years. So whatever is my export in the last 3 years, out of that I need to achieve on an average this year, plus in addition to that whatever I achieve, that will be counted for specific export obligation. So specific export obligation is 6 times the duty saved. This is over and above the average export obligation. For example, so duty saved on import. So capital goods imported, capital goods imported is rupees 10 lakhs, capital goods imported rupees 10 lakhs, duty saved on capital goods, duty saved on capital goods is rupees 3,50,000. Then what should be the specific export obligation? The specific export obligation is 3,50,000 into 6 times the duty saved. So 3,50,000 into 6 times, that will be 21 lakhs will be taken as the specific export obligation. Now what happened here is that we need to see year 1, 2, 3, 4, 5, 6, and what is the exports? What is the exports made in each year? Say exports made in each year, somewhere like for the first year we are making an export of 6 lakhs, and thereafter 8 lakhs, then 12 lakhs, then 14 lakhs, then 10 lakhs and 15 lakhs. So 6 years. Why 6 years? Because if you observe here, so this should be achieved, this export obligation should be achieved in 6 years from the date of issue of authorization. We need to achieve within 6 years. So that's the reason why I took 6 years. And what is the average export obligation? Average export obligation, if you see, first year it will be 6 lakhs only, and second year it will be average of these two, 6 lakhs plus 8 lakhs divided by 2, that is 7 lakhs. Whereas third year, so 26 divided by 3, that is 8 lakh 66 667. Then fourth year, average of the preceding 3 years. Okay, so see here we need to maintain average of the preceding 3 licensing years. Okay, so therefore first year same, second year will be 2 years, third year will be first year it will be 6 lakhs, first year it will be 6 lakhs, second year again preceding, that will be 6 lakhs. Okay, and third year, so we need to take preceding, we don't have preceding for the first year, let's assume 6 lakhs, and third year preceding to 8 plus 6 divided by 2, 7 lakhs, and thereafter next one preceding 3, so 6 plus 8 plus 12 divided by 3, that is 8 lakh 66 667, then again preceding 3, 12 plus 8 plus 14 divided by 3, that is 11 lakh 33,333, then 15 for this, 10 plus 14 plus 12 divided by 3, that is 12 lakhs. This is our average export obligation. And what will be specific export obligation? So over and above this, so here 0, and here 8 minus 6, 2 lakhs. Okay, and suppose if here somewhere like 4 lakhs, okay, assumed, so given, okay, given, based on previous 3 years, and then 2 lakhs will be counted. Here again 2 lakhs, here 12 minus 7, that will be 5 lakhs, and 14 minus 8.67, that is 5 lakh 33,333, then 10 minus 11. So we have not achieved. We have not achieved here, and therefore as we have not achieved average export obligation, so therefore EPCG cancelled. Therefore EPCG cancelled. Why EPCG will be cancelled? We need to achieve average export obligation, and beyond that we need to achieve specific export obligation. Suppose sir, suppose if in this case, so it is not 10 lakhs, it is like 12 lakhs, then we have achieved the average. So the remaining 66,667 will be counted for specific export obligation, and again here, so 15 minus 12, 3 lakhs will be taken towards specific export obligation. Now you do the total of specific export obligation, 2 lakhs. First average, beyond that only will be counted for specific. 2 lakhs plus 2 lakhs plus 5 lakhs plus 5 lakh 33,333 plus 66,667, then 3 lakhs, that will come to 18 lakhs. What is this specific export obligation? 21 lakhs. Therefore EPCG rejected. EPCG rejected, which means whatever duty saved 3 lakh 50. Okay, so 3 lakh 50 along with interest is payable. So that is the disadvantage with EPCG. Okay, so average export obligation preceding 3 years average, specific export obligation 6 times the duty saved. This is over and above the average export obligation, can make export of goods including deemed exports or services, both are allowed, and exports under other scheme also counted for the purpose. Under AA anyhow we make export na, under DFIA we make, everything will be counted for the purpose of EPCG. And if you make local procurement, see there, if you make local procurement, they gave a relief. What is that? Specific export obligation is 4.5 times the duty saved, which means instead of achieving this 3 lakh 50 into 4.5, so 15 lakh 75,000. Had it been local procurement, this answer, so EPCG valid, means we have achieved the exports. Average also we have achieved, specific also we have achieved, because the weight will automatically come down to 4.5. Got it? Specific export obligation 4.5 times the duty saved. Then how the consideration should be? Convertible foreign exchange. Can the license be transferred? No, the license cannot be transferred. Whether imports are subject to actual user condition? Yes, till the export obligation is completed. And what are the other conditions to be fulfilled? Capital goods can be used for pre-production, production or post-production, and export obligation should be achieved in 6 years. Suppose if 75% of the export obligation is fulfilled within 3 years, means what? If you are able to achieve 75%, that is 21 lakhs into 75%, 15 lakhs 75,000, you are able to achieve in 3 years. Definitely here it is not there. If you are able to achieve, then remaining 3 years we don't have to fulfill any specific export obligation, that is this. If 75% of export obligation is fulfilled within 3 years, then remaining 25% will be relaxed. Not applicable to restricted capital goods without approval, so that cannot be imported. Then next one, we have EOU, EHTP, STP. So that is for what purpose? To import inputs or capital goods without payment of duty, both inputs and capital goods. But what is the difference from this to this? This is like a unit, this is like an area. For their business they can do everything. For export of goods, basically they are into exports. Either they can be EOU, export oriented unit. But for establishing an EOU, the minimum investment criteria is 1 crore in plant and machinery. However, board of approval may allow a lower investment criteria. EHTP, Electronic Hardware Technology Park, STP, Software Technology Park, BTP, Biotechnology Park, and any type of business including repairing, software, agriculture can be done here. And what can be imported? Inputs are capital goods, benefit full 100% of exemption from all customs duties. And what is the validity? 5 years, means every 5 years they need to apply for EOU status. And can they make domestic procurement? Yes. without payment of GST. So thereafter, two options for refund. Either supplier can get refund or recipient can claim refund, that is in GST. Export obligation, entire export production, they should not be making sales in DTA except for a permissible sales like 5%, like that it will be allowed to be made in DTA, but 100% they should be making export only. And next, consideration in convertible foreign exchange, yes. If you see, for everyone it is yes, except for deemed exports. And can the license be transferred? That is not applicable because it's not like a license model. And whether they are subject to actual user condition, yes. And in this 5 years, they need to achieve net foreign exchange earnings. Means what? Their income in foreign exchange minus expenditure in foreign exchange should be positive. And in a block of 5 years from commencement of production, export proceeds should be realized within 9 months. That is the time limit under FEMA for realization of forex proceeds. And inter-unit transfer upon payment of GST, because they enjoy lot of benefits. So if they are making sale from one unit to another unit, they need to pay GST. And if they want to exit in this 5-year period, if they want to exit, whatever benefits that they have claimed on import, that much amount they need to pay. And even existing units also can apply for conversion. And would not applicable, they can do any business except trading. So they can do manufacture, they can do service sector, but trading is not allowed. And prohibited goods should not be manufactured and exported, that is there. Then that is in the name of tea or coffee, so ganja cannot be exported, that is what they are trying to say. Then deemed exports. Deemed exports means we are not making export, but we are making sale to some notified people, that is considered as deemed exports. Sale of manufactured goods in India to specified project or specified consumers. What are those? Remember first three, that is sale to AA, sale to EPCG, sale to EOU, okay. Sale to AA, sale to EPCG, sale to EOU, this one. Sale to AA DFIA, sale to EPCG, sale to EOU, that same. Thereafter, supply to some projects. What are those projects? Nuclear power projects, mega power projects, projects financed by UN or international organization, then international competitive bidding projects. Maybe this can be asked as a theory question. What are the various deemed exports? Like that, these points can be asked. Total 7. First 3 is this column headings. Sale to AA DFIA, sale to EPCG, sale to EOU. Thereafter 4 projects. Mega power project, nuclear project, project financed by UN and international competitive bidding projects. What can be imported? Both inputs or capital goods. And what are the benefits available to them? They can import under advance authorization. For example, you are an advance authorization holder. I will make sale to you. I can import under advance authorization without payment of customs duty. So rather than you importing without payment of customs duty, I will import without payment of customs duty. Import under AA DFIA. Or I will pay customs duty, and whenever I am making sale to you, I will get the refund of that, like deemed export duty drawback. So upon import and pay sale, upon sale get the deemed export duty drawback. Refund of terminal excise duty. Suppose locally if I am procuring anything, on that some excise duty will be there, like fuel, etc. That excise duty also I will get as a refund. And what is the validity? Here it is completely up to project completion. And they can do domestic procurement also without payment of GST, and sale to specified project or specified consumer within the country. There is no concept of export obligation here, and consideration may be in Indian rupees or in foreign currency. License, this is not like a license model, and there is no actual user condition. Supply shall be made directly to the entities. Supply can be made at the project or site. So directly to those projects only to be given, either to their office or to the site where they are doing the work. And third party supply, that is subcontracting, is not allowed. For example, I enter into contract with you, I cannot authorize some other person to supply to you. If I authorize some other person to supply to you, for him it will be deemed export, not for me. So what should I do in that case? He should be raising invoice to me and I should be raising invoice to you, then only it will be treated as deemed export. However, they can supply to main contractor. In turn, the main contractor will be supplying to the projects. That's it, pa. So this is there as various export promotion schemes. Apart from this, what you need to read is that, so take page 286 and 285, completely you remove that. you delete it. Then advance authorization for annual requirement you need to read. So far whatever we discussed as advance authorization is specific, like consignment based. Like that, what they will do instead, they will give full year itself on advance authorization to the extent of 300% of FOB value of physical exports or 1 crore, whichever is higher. To that extent we can import, like that they will give. That is advance authorization for annual requirement. This concept you read. And this fulfillment of export obligation not required. Then this last RODTEP scheme. So simple. In this RODTEP scheme, what will happen? You are manufacturing some goods in India, and when you are manufacturing some goods in India, you are paying some local taxes. When you are exporting those goods, whatever local taxes that you have paid, you will not get any relief. So that's why a percentage of FOB value of your export they will be giving to you as an incentive. Refund to exporters, so certain local taxes like corporation tax, municipal tax, etc. And this refund will be given to us in electronic credit ledger, duty credit ledger. What we can do with that? We can use it only for payment of basic customs duty, or we can transfer it to others. All these are connected to electronic duty credit ledger. Then, so the rebate under this scheme shall not be available in respect of duties already exempted, and under this scheme rebate would be granted based on percentage of FOB. However, some cases, some like absolute amount they will give 20 rupees per unit or 100 rupees per unit, like that. And we have to ensure that we are realizing the proceeds within the time limit under FEMA. What is the time limit under FEMA? 9 months from the date of export. Otherwise, whatever rebate we got under this will be recoverable. It's not like only when we realize proceeds we will get the rebate. First they will give the rebate, but thereafter we need to realize the proceeds within the time limit under FEMA. If the sale proceeds are not realized within the time allowed under FEMA, then the rebate granted shall be recovered from the person to whom rebate is granted, even if I transfer the duty credit script to some other person. And there are some ineligible supplies. Logically you remember, only for manufactured goods in India they will give. Suppose if I am exporting the imported goods, those are not locally manufactured, so I will not get the benefit. Then export through transshipment, import from one country and sending to another country, then also will not get. Export subject to minimum export price or export duty, already they are giving a benefit there. Then restricted goods, prohibited goods, not possible. Deemed exports, still the goods are in India, that's why this RODTP will not come. And supply of products manufactured by DTA to SCZ, again goods are still in India, so it is not export. Products manufactured wholly in customs bonded warehouse. Customs bonded warehouse, why there will be local taxes, there won't be any local taxes. So in these 8 cases, RODTP scheme is not available. Then this EPCG you delete, all other pages you delete completely, and you just follow whatever I have given, okay, that chart. Finally, this penal action. So if you are breaching any of these things, they can levy a penalty on the authorization holder, and they will be keeping the person in the denied entity list. Just remember this, enough. So with this we completed customs foreign trade policy. So today's agenda we have achieved, okay, including some questions we have solved on this, and tomorrow morning we will be starting with GST.